Greetings, members, one and all of the Salivation Nation. Gold prices could actually rise after the Fed raises rates. Let's explore. We are living in uncertain times economically, and during those uncertain times, most expect gold prices to go up. But what affects the price of gold? Well, we know there are several different factors, and a lot of it depends upon where the economy is going down the road. The Federal Reserve has talked about tapering, but they've also talked about raising rates, and most people correlate raised rates with lower gold prices. Historically, investors, they flock to gold during economic uncertainty, causing its price to skyrocket. Logical analysis reveals that higher interest rates means the opportunity cost of holding gold is higher. So your money will earn more elsewhere. So that means that people tend to move away from gold and back into areas in the stock market where their money can do more for them when interest rates rise. The interest rate hikes are an indicator of an improving economy usually. Savings accounts pay more interest, people say, and shares pay higher dividends and property values will rise faster. But that's not the whole picture. We know that high interest rates can only mean higher risk profiles as well. So there's less incentive to hold gold. It pays no interest at a time when other assets are paying big rewards. And this could not be further from the truth. When we look at this more in depth, rising interest rates are often a market response to fears of economic instability and currency volatility. And that's where gold comes into play. And this video being sponsored by Nevada King, who is a gold exploration company with the U.S. ticker symbol TSX-V, NKG, and the Canadian ticker for the OTCQB, VKMTF. Let's talk a little bit more before we get into Nevada King about these interest rates. Economic studies suggest that there's little obvious correlation between interest rate hikes and the price of gold. Few detailed studies exhibit evidence gold price is in fact rising. It's a hard call to make. There's research that's been published by Gold Money that suggests that gold increasing about 4.85% during interest rate hiking cycles. This is a comparison to 4% during interest rate cutting cycles. There's a study from HSBC that shows clearly that the price of gold increased after the last 4 Fed rate hikes. Still, take this with a grain of salt, because it could be evidence of a long-term price increase in gold due to other factors such as an ever-weakening greenback. And so those are some of the factors that could come into play. It's multifaceted, so we have to look about what affects the price of gold. To a large degree, history supports precious metals as a counter-cyclical to the economy, a contrarian factor. Neither the economy nor precious metals ought to be judged primarily on interest rates. It's essential to look deeper beyond those numbers. And I think that is what should be considered here, is that there's going to be other factors that come into play. So does gold go up when interest rates rise, signal a good time to buy? Yes. At the first glance, the phenomenon of rising gold prices during a period of rising interest rates may very well occur during a classic depression. Who knows if we're heading for one? The economy improved significantly before the pandemic and shows no self-evident signs of impending disaster, yet the prospect of raising rates has kept many investors with gold as part of their diversified portfolio. Gold and silver prices fluctuate every day. Some investors may be short-term oriented, but there is always more wisdom in long-term plays, for sure. In the very long term, gold has reliably risen more or less in line with inflation. So you shouldn't be too put off if you're in it for the long run, and that is something to consider here. But there are things that work against and especially with the greenback and inflation continuing on, especially with interest rates being hiked and it not having an effect. The Fed could have played their hand too far with all of the easy monetary policies that they have done. It's all about faith in that greenback. The dollar index is really the major factor that drives the price of gold. And that, in a sense, is independent of interest rates. One should not automatically assume that gold is going to go down if the Fed raises these rates. And I believe that we could see it actually go up, especially in this certain situation. Gold does even better when real interest rates are negative, but in 2017, the price of gold remained relatively stable. Banks were paying negative interest rates when at first it might seem strange. In fact, it reflects market opportunities. So when we look at fundamentals, whether you buy a COMEX futures contract or a 1 ounce gold coin, when a government pays an inflation-beating interest rate, there's less reason to hedge against traditional assets. But don't let this cloud the bigger picture. There's so many other factors that should be considered. And there's still room for capital gains in a healthy economy. The stats prove that demand for gold might rise due to rate hikes being bearish for stocks. Demand for precious metals from individual buyers would likely grow during a growing economy too. The supply of gold is as important as demand for buyers and still have an impact on the overall price. And so we are kind of beyond peak gold, most people feel. And in fact, we're seeing it start to move the other way back down. And that's why, especially since the pandemic, there has been a lot more activity out there searching for new gold. And Nevada King is one of those companies that is looking, and they have a good team behind them. This year, the biggest winner in the entire gold sector has been a company called Newfound Gold, which you may remember I profiled on this channel. The same founders, same management team, and same strategy that they're using to build a $1.6 billion giant are executed with Nevada King right at this very moment. Yet its market cap is only $80 million. So there's essentially a 2,000% gap. Nevada King has staked 7,000 claims in Nevada's most prolific mineral belt, Battle Mountain, since its formation in 2017 at the depths of the bear market in gold, when little money and few investors were willing to engage in contrarianism and to risk time and funds on entrepreneurship. So think about going from 0 claims to over 7,000 in just a few years. It is excruciating work since every stake requires putting 5 poles in the ground, filing with the federal government, and maintaining the annual fee on all of them. If you try to do this now, you'll soon find that there is very few left. So there's a potential reward of this in monetary terms. And Nevada is the #1 gold producing region on planet Earth. And maybe that's why the name Nevada King is so apropos. If it was its own country, it would be the 4th largest producer. The value proposition of this company is, in fact, that if any large cap billion-dollar producer wants exposure to a wide range of exploration claims that are currently wholly owned by Nevada King, they will probably have to essentially go through it. So the company states that 98% of its ground has been acquired via staking, and as such, the company does not owe past owners royalty rights or JV agreements on the majority of its ground. We, the shareholders, are the legal claim holders. And part of what makes a good company is the management team behind it, and it is made up of Colin Cattell, Paul Matsiek, and Doug Foster. And they're behind another gold company whose market cap has appreciated by 300% in the past 6 months. Paul Matsiek is part of Lithium X, which soared 500% in 18 months and was sold at its peak price. So that is the story behind Nevada King, which essentially is running along the same tracks as Newfound Gold. Same team, same strategy. fascinating indeed. And so it's something that if you're interested in mining stocks and exploration of gold, it could be an opportunity, a very good opportunity. But with opportunity and with reward can come risk. And that is something that should be considered when putting money into any stock, but especially an undervalued stock like this. You know, there is an adage of buying low and selling high. And this is one of those occasions. Sometimes when you buy low, it provides for a greater risk that it may not go up or it may go down even more. But the companies like this provides that opportunity if you're especially interested in discoveries of new gold claims out there. And Nevada King is a company that I've actually profiled before, and they are something that has this potential to do well, and considering that they are going to be start drilling very, very soon now, and their balance sheet is loaded with $18.5 million in cash, and they have no debt. So something to take into account and consider if you're interested in mining stocks. And if you have any questions about Nevada King, I'll post a link to their website where you can contact them to ask any questions. Do your own due diligence and research when you look into companies like this. And this is just another opportunity that I'm presenting to you in this sponsored video. So a multitude of gratitude to you all. And I want to encourage you to please rate, share, comment, and subscribe.